So now, okay, let's go a bit deeper into how the indicator actually works in practice. Market conditions are constantly moving from trend to consolidation and vice versa. So this is the law of market movements, and these states resemble the behavior of an alligator. So first, the market is in a correction. That means the alligator is sleeping. When there emerges momentum, the alligator is waking up. And when you trade with the alligator, you should constantly watch the behavior of the three lines. The location of the lines indicates the market state. So now let's start from the moments when the market is not trading. The moving averages, as the name implies, show the average price of values over a certain period. Therefore, if MAs are in the same place on the chart and do not show any direction with their slope to the downside or to the upside, then the market is not trending. Differently put, the market is trading flat. When the trend is about to start, the lip line, the green one, which is the fastest moving average, is the first one to react to the changes in the balance of buyers and sellers in the price chart. So when the lip line crosses slower MAs, we could assume that the trend is about to start and the alligator is, quote, waking up. So following the green line, the lines of the teeth and jaws, the red and blue ones, begin to acquire directions. So when the three moving averages line up in the same direction, the trader decides whether to enter the market or not. So when the next candlestick closes above or below moving averages, it is a signal to enter a buy or a sell trade. I should also note that some traders use additional filters to supplement the alligator, as it sends quite a lot of false signals in the sideways trend before the market determines the direction. So as additional filters, you could employ other indicators developed by Bill Williams, like Awesome Oscillator or Fractals. I will cover how to use them in detail in a moment. But now we have a situation when the trend has formed with a clear direction. If the trend is up, the lines are arranged in the following order. The green line is on the top, next comes the red line, and the blue line is the lowest. And all three lines are directed up. As the trend develops, the distance between the lines is increasing. In a downtrend, the lines are arranged in the opposite order, of course. The jaw line is at the top, below is the teeth line, and the lip line is the lowest one. Likewise, all three lines are directed to the downside. So, as the trend develops, the distance between the lines naturally is increasing. And now we move on to the working principles. The alligator trading strategy suggests that you should watch the arrangement of lines in the chart. You need to learn to identify the market state, when the alligator sleeps and when it is waking up. It is important to filter signals generated by the Williams indicator to increase the number of profitable trades. So as for the calculation formula, I think there is no need to discuss that here. We checked it briefly for a moment, and we know that it is a combination of moving averages, and in general the values of each indicator line can be calculated even manually, so it is rather simple. And on top of that, the alligator is of course present in every trading platform by default, so there is no need to calculate these values yourself. Now, what signals are provided by the alligator? The most important thing is that you should open a position as soon as possible to the beginning of the trend and at the most favorable price, of course, and then close it together with most big players. So, in a trading range, the alligator's mouth is closed. With the beginning of the trend, it begins to open and eat. So let's take a look at what signals the alligator generates. I will divide the alligator signals into 3 groups. Each of the groups describes a certain state of the market at the current moment. The first one is the consolidation state of the market. It is characterized by closed mouth of the alligator. The lines of the lips, teeth, and jaws are interwoven, each next to the other, in approximately, of course, the same place on the chart. The lines do not indicate a specific direction. They are located in the horizontal plane. So the sleeping state is characterized by a flat. It's the formation of an accumulation zone, as larger traders are adding up to the trades. Now comes the moment when the alligator is waking up. After the traders accumulate positions, a weak price movement begins. At this momentum, the mouth begins to open, and the price chart crosses the alligator line in a particular direction. Then the line begins to line up in the trend direction, one after another. First, of course, is the green line, then the red one, the teeth and the lips, and then the blue one, the jaw. Suppose the price is above or below all the indicator lines, and moving averages already indicate a specific direction. In that case, they point in one direction, then the alligator has woken up, and the hunt will begin soon. So it's time to look for an entry point. And with that, we move to the next phase when the alligator is eating. So if the momentum is supported by other traders, then the mouth begins to open wide and wider. The lines of the lips, teeth and jaws point in the same direction. The distance between the lines starts to increase. There is a clear trend in the chart, and the strength of this trend will be proportional to the time the alligator slept. The longer the market has been in the accumulation zone, the stronger the momentum will be. At this moment, you cannot open positions against the trend. Traders who enter a trade against the trend by mistake are doomed to failure. When alligator is eating, nothing will stop it. So when it's eating, you should trade only in the trend direction using strong support levels to enter the market, which are provided by the lines of the lips, teeth and jaws. After the alligator is full, the market calms down. The lines lose direction and begin to intertwine with each other. That's the moment when the market needs a break and the alligator falls asleep at the moment. Okay, now we move on to real examples from the markets. So this figure displays the hourly time frame of the Brent oil chart. In the hourly time frame, I prefer using the following settings of the indicator: 21, 13 and 8. But I will cover that, of course, in a detail slightly later. So, on the left side of the chart, we see that the alligator is waking up. A buy signal appears, followed by a powerful uptrend that characterizes the stage when the alligator is eating with an open mouth. After some time, the price tests two lines of the indicator, green and red, but the direction of these lines is still up, so the market grows by a few more points. Next, the price breaks through the alligator lines and updates the local minimum. The lip line crosses the teeth and jaw line, signaling the end of the uptrend, and then it's time to take the profit. The next stage of the alligator trading is sleeping. At this stage, the market is trading flat. It is not recommended to trade in the sideways trend using this strategy. But after sleeping, the alligator is awakening. The mouth begins to open and another uptrend starts. So when the green line is above the red one and the red is above the blue one and the price is trading above all three alligator lines, a buy signal is generated. So then open a long position at the start of an uptrend. Then we see the mouth opens, the alligator is eating, and when the price hits the highest high in the chart, the price enters a consolidation range. We can spot this by the moment when the green line crosses the red one and the red line crosses the blue one, which means that the alligator is falling asleep. It begins to wake up when the distance between the lines begins to increase. So on the right side of the chart, we see that the price is trading below the lines and they acquire a downward direction. So it is a sell signal in the alligator trading strategy. In this example, the downtrend does not last long and the lines cross each other in the opposite direction. It is a time to exit the short trades and turn up. Here the alligator doesn't rest and right away starts hunting, and the last buy signal appears on the right side of the chart immediately after the sales are closed. Okay, now how to use the alligator in Forex trading strategies. So they come into two groups. The first type of trading with the Bill Williams Alligator indicator suggests you don't use any additional tools. The second type of a trading strategy employs additional filters to spot entry points. So, Employing auxiliary indicators reduces the number of false signals and gives an opportunity to enter the market with additional confirmation. So to begin with, let's consider the classic use of the alligator without using any other analysis tools. That is, the indicator is used in its original form. So open the chart of any trading instrument, and I will use the gold price chart as an example. It is clear from the chart that the gold has been trading in a downtrend up until this moment. All the attempts to drive the price up have been absorbed. When the price was above the alligator lines, the lines themselves didn't change their direction. That is, it has been relevant to sell gold all the way up to this moment. Since the end of the trading session on January 18th, 2021 to the beginning of the trading session on January 19th, 2021, the alligator fell asleep. This market state is characterized by uncertainty, and one shouldn't enter trades during this time. Starting from the European trading session, the alligator begins to wake up. The lines start to line up, and during the first trading hours of the European session, the price closes above the alligator's mouth. So we notice this moment and decide to look for an entry point to buy gold. Starting at 1 p.m. terminal time on January 19, the price begins to decline to test the support area formed by the alligator lines, and after the price tested the area of lines congestion, i.e. the support, and after the candlestick of course closed right at the levels at 2 p.m, we decide to open a long position with a stop loss below the local low of January 18th at 1828.94. So the position opening price is 1838.15. Then we can see that there is no trading activity at the US session. The market participants are accumulating trading volume. On the new trading day of January 20th, the market closes at the price rise. At the European session, there was a try to reverse the trend down. However, the price doesn't break out the alligator mouth lines, namely the jawline, and so the trend continues. Just before the US session, the trade is exited with a take profit at 1862. So this take profit level was not chosen randomly. This is the level of the previous local highs. The target of an uptrend is to break through the important high. As we use the alligator indicator alone, without any additional filters, the stop loss orders should be placed beyond the local lows and highs, depending on the trend of course. So, take profit levels are set at the breakthrough of important high and lows. The result of the trade is in the screenshot over here. So, it was an example when risking 1% of the deposit, we can afford to enter a trade of 0.45 lots. The ratio between profit and potential loss, which is the risk reward, was 2.59. Thank you for watching part 2 of the video. I invite you to watch, of course, part number 3, which is the last one of this mini course, where we will discuss trading strategy using alligator and fractals, and I will talk about how to act in various scenarios which can occur during trading on a real market. For example, when to move your stop loss at a break-even point, or when to just exit immediately off the position.